It is Thursday the 14th of August, and I'm going to be doing a review. As you can see, personal daily loss limit on my combine. Also, it's at negative almost 800, whereas the loss limit should have been at 500. I did change it, but yeah, I really need to go over today because I had so many extremely good ideas, and most of them played out really, really nicely, and I caught a lot of them on paper as well. Yet, on my combine, I was taking suboptimal entries on correct ideas, but suboptimal entries. For example, in this area, I wanted the short, and I took multiple attempts to get short in this range, and yeah, got shaken out or closed out or something. So I'll try and keep this relatively structured, but it won't be as structured as the previous video. But if we look at the equity curve, you can see that it was started off with a loss at about 5 a.m. We then climbed back up around 7, and then gradually began just around there, but it's around the 9:30 open is about here. So 9:25 took a bit of a hit, and then it just rolled over from there. I definitely took too many trades. I don't know how many exactly because I was taking partials obviously, but we can roughly count. Jump on to NASDAQ. So it looks like there's one attempt at a short here, and then second attempts right there before getting stopped out. So 2 trades there, and then we have a short attempt just there, and then trying to get long, and then eventually getting short again, I believe. Getting short here, then getting stopped out, whereas NASDAQ didn't actually take out that high, but MNQ came all the way up to it, so I had my stop sitting at this high, and it got perfectly taken out at 41.25, so that was my fill. And then right at the open, I recognised that this was the manipulation. I got long, and had my stop just below this 15-second or this 1-minute candle, and it spiked down and took me out right there. So should have had my stop at the actual low. And then I left NASDAQ alone as I was focusing on gold at this point, but I was looking to take a long in this area, but it never quite gave me what I was looking for to take it. So that was only about 5 trades on NASDAQ. And then if we look at gold, can't even remember what this was. Oh, this was that 5 a.m. Loss. A fairly impulsive trade, I seem to remember, so that's why I didn't trade afterwards. I gave it a big break, walked away for a bit. But that's one trade there. And if we scroll across, this is a second trade, getting long. That one worked out really nicely. Then trying to add to the same trade, so that's still the same trade, so it's just 2 so far. And then we have this trade, getting short, closing because the 5-minute candle closed above this green line, and then as soon as I closed it manually, my stop loss was sitting up here actually, so it's out of the way, and then it dumps, and then I realized all of a sudden, okay, back in because it's bearish. So I closed because the 5-minute closed above this line, and the 5-minute closing below that line would have been a signal to add more size. So I figured if it closed above, then it's probably going to come for this high, and so I'd actually get out and get back in up here. And then when it sold off, I was like, okay, back in because it's bearish, and let's see what happens. So I got back in, added, and then it has the shift below this low, and so when we closed back below it, I believe, where did I get stopped out? Okay, I got stopped out exactly there somehow. It would have been after we had this down closing candle, and I didn't like how it was moving up like this, so I figured, cool, I'm going to move my stop to that high. It stops me out perfectly, and then then I get short again because it closed back below this low, and then it rips up, stops me out. This was so my stop was sitting up here above a long wick on the 1 minute. There's a 1 minute wick here somewhere, and the midpoint of that wick I was using above that to put my stop loss. But because I was already I just wasn't liking this that much. I figured, okay, if I'm going to take this trade, I might as well put on even more size. So it's not very clear on the futures contract, but on the currency, there's an entry model in here where we retrace back above this low, close back below it, and so I tried shorting on the closure back below this low, which would have been like that, so on that candle, and then trailing my stop really tight. So if it had worked out, it would have been really nicely in my favor. And it started moving a bit in my direction, but then came and took me out, and that is what stopped me out for the day. So there was I think I said 5 trades on NASDAQ, then there's 1, 2, 3. So 3 ideas on gold, but then 1, 2, 3, and then you could say this is 4. 4 or 5 attempts at a trade on gold that I didn't quite catch, and it's frustrating because this is a significant loss. Like 800 is not what I was wanting to do. My loss limit was set at 500. I moved it to 700 because I had such high conviction on this trade. Like I'll go over to the currency now and show you, and this is at the moment I got stopped out, we got the entry signal, so I'll show that to you real quick. So I did take it on paper, so I'm satisfied that at least I can gain the experience. It's essentially, if I hide everything, this swing low is visible in the 5 minutes time frame, and this is the swing low that made this manipulation that took out this high. So what I want to see is I want to see us drop below it, and then when we get back above, if we were bullish, this should reject price. We should just continue pushing up. So what invalidates bullishness is if we get below it, start pushing up, but then close back below, such as we do right on that candle there. The entry model is essentially to just short and put the stop loss above the failure swing high. And that entry showed up exactly where I got stopped out. So that's technically that would have actually been where it was valid, but that was the moment that I was watching the 15-second chart right here. So technically, as soon as we close this candle and we moved on to the next one, which is on this candle here, this candle would have been a valid short entry any time after this, and ideally at this line where we retested. However, because I was so focused on this and I already had a trade on, I was more watching this and thinking, okay, how can I add to this? Cool, I'm going to add, because we broke this low once, traded back above, and now we've broken it again. So I shorted right there, started moving my direction, and then came up, stopped me out. I hit my personal daily loss limit on Top Step, and then all of a sudden I zoom out a bit. I'm like, oh, this is exactly what I was looking for. We have the M5 closure and the retest of that, so I slapped a short. Then I was watching the 15-second, and it even offered me the 15-second entry, which I saw live. Because as soon as I saw this, I knew that this was the 5-minute entry. As soon as I saw that 5-minute closure below that line, and then retest, I was very confident. I was extremely confident on the draw when I was hitting lower. And then I have a quick look at the 15 second, and sure enough, there's my entry model right there that I could have also taken. So yeah, I was that close to having a super high R trade. If this trade does play out, it is 10R, 9.5R. I would be taking partials down here, obviously, but I just can't be bothered, to be honest. But yeah, it's a nice trade. But I'll go over that in a bit and what I actually saw. First of all, I'll quickly have a look over a Nasdaq trade that I also had the right idea for. However, messed up the execution. So if I jump over to Nasdaq and go on the 1 hour chart, so as you can see, I've already started the markup. I started marking it up as the trade was initially put on, and I can show what that looks like. So if we go to the hourly chart, all-time highs over here. We recently broke above all-time highs. We also recently broke above 24K just yesterday. And so we've had a lot of breakouts above key high time frame levels. We then drop back down into the range. And obviously I don't want to pick tops and pick bottoms, but then when we are at a place like this, there are a few things that go through my mind. Are we more likely to squeeze out anyone who's trying to short, or are we likely to target whoever's needs somewhere to trail their stop? In this case, both could be a situation, but what told me to look for a short was this scenario here. This is a framework that I look for when we have a long wick. This follows with a displacement, and that's essentially if we leave the wick unfilled and then print a value gap afterwards and really push down. That tells me it's a signature of heaviness, and so I'm looking for an outsized move. When I saw that, I recognized, okay, this should remain heavy, and if it's going to remain heavy, then I'd expect this fair value gap, we should remain below the midpoint most likely, and definitely don't come up into here, because otherwise it just invalidates this entire framework. When we go above 24K, when we go above any really large number, I like to see us go 200 points above and below it. After breaking above 200 points, that becomes down here at 800, which is why I have the partial take profit set down here. And I said also potentially you could leave a runner for that. And I did execute on this actually as well. So if I connect to paper trading, I believe it was on day trader. There we go. So entry was at the soup of this high at 23,960, so very close to the actual high of the candle, and that was just based off of us coming up into this fair value gap, and I wasn't expecting us to go far through, and so I had my stop loss at the premium end of it, which is just up here, because if it does go all the way up there, then it's invalidating the heaviness, which is exactly like that goes with this framework, so it would mean that I was incorrect with that advice, but I was correct. I got in right there just on a limit entry. Climbs up, that's where I was trying to go short on my combine, and then I didn't even realize it was PPI today, but yeah, PPI delivers beautifully. Take profit just above the 800s, and as you can see, we actually made the low at 93.25, so I did it just above the 800s for my TP, at 804, just in case it came down and made a false low there before heading up. But overall, a really clean trade, and that's what I mean. Like, this is a trade that I had very high confidence in, because this is my framework. Like, this is my strategy. If I see this is something I should be executing on, and so I had full confidence putting on a short. However, when I was putting on a short, I was obviously just using the wrong time frame. I was looking at the 1 minute, and also using the hourly. I figured that this would be a bearish order block, and so as we were climbing up into that level at 7 a.m, I thought that we'd have a 7 a.m. Judas up into it and then sell off, but PPI ended up just knocking out that Asia high, and then that's what sent us lower. We also had SMT with the 4 p.m. high as well with ES. So yeah, that's that trade. And if I jump over to Nasdaq, and you can see my executions on it for the combine. I was looking at the 1 minute. But yeah, looking at this bearish order block that took out this buy side pull, and so I figured that was okay. We will probably leave the Asia high intact, and if it does go above, I'd still be looking to go short in this area because it's quite confident in this trade. Got short right there at the bearish order block open, got a few nice entries, began moving in my favor, and then it started ripping up towards the Asia high. As soon as I saw that, like, it didn't feel like it was, like, when it's that close to the Asia high, you start thinking, okay, it's just going to take it. If it does give me an opportunity to get out at BE, I should do it. So I mitigated 50% as we hit this low, and then the rest I took out just about at break even. So very small loss on this short entry, which was nicely done. But then when I saw us break down like this, I started second guessing my decision to jump out, because there have been situations in the past where it's come that close to my stop loss, and then it's shown some really nice momentum lower. So I figured, well, I might as well just try with some small size on this order block just in case. Got stopped out really fast, and that is perfectly fine. There was only a 5.5 loss, 5.5 point loss on 3 contracts, so no worries. We then sell off. When I see this big candle, I check the news. I'm like, oh, it's PPI. That's right. Bit annoying, but it's cool that's my trade worked out, but I was a bit upset about it otherwise. Then in this area, go back to the charts. I was in two minds about what I wanted to see, and this is probably where I went wrong. I didn't have a clear bias anymore. We'd hit the 800s, and that was my draw. So, I didn't really have a further downside target that it had to go to that I was extremely confident with. We've obviously just sold off, so there's going to be people wanting to trail their stop somewhere. And this is a very obvious high, and that's an extremely obvious high, that impulse high just there. So I shouldn't have been taking this short. But what I saw is this rally up and how we worked our way below this low. So I figured that, cool, this would be a great place to take a low risk short with a stop loss above this this high. Moves a bit in my favor. I take 2 out of 5 off, and then it comes out and stops me out. After it stops me out, that's right, I got short straight away, and then I got straight back out because I figured that was a kind of dumb move. So already you can see I'm making some bad trading decisions that aren't in line with my plan, because my plan's already played out. What I should have been waiting for is for the regular trading hour trailed stops model, and wasn't patient enough. We then start working our way down into this range. I recognize how we're looking heavy in this area. I missed a 15-second entry in here. It then moves low. It's showing heaviness, so I took a short, and actually got stopped out of that. So that's right on the 15 seconds. That's where this wick perfectly stopped me out, whereas on NASDAQ, on NQ, it didn't stop me out. It actually only came up to about there on NASDAQ. So that was kind of annoying. I then jumped over to the NASDAQ contracts because of that, and took a random scalp in this area, which was basically a break even, but a bit risky. So as you can see, I'm just getting more and more zoomed in and making worse and worse decisions. And it all, I don't even know where it comes from. Maybe it's from just the fact that I had such a nice move that I missed, and now I don't know what to expect next. Like, what's next? I missed my move, and now what? But yeah, getting short, getting stopped out exactly at the high. And then this, I really liked this trade here. I just didn't execute it quite right, but I'll go through why I liked it. That's what I'll do now. So I'm going to jump over onto a cleaner looking chart. And I'll bring up to what we find. So 15 second on the left, and I'll go down to this area. Then 1 minute on the right. So first of all, I wanted the long because we had the idea of trailed stops, obviously. So everyone's going to want to trail their stop somewhere. This high is extremely obvious, especially going into the open. And we've already been rejecting these lows quite nicely. I was then watching this impulse low. The reason why I'm looking at that is because this is a intermediate term low below it. This is the impulse low that ran up and took this high. And so if you were, let's say if you're bullish, if it does hit this low, you'd want to see it reject. You don't want to see it keep on pushing below it, otherwise it's probably bearish. And so initially it was rejected, and then consolidated in here. And if it is to close back below that low, that can mean one of two things. It either means that it's bearish and it's about to melt, or if it closes back below it and then rejects rapidly, then that can indicate that that is the manipulation and to look for a long. If we look at the 15 seconds, you can see that when it did close down there on this candle and then that candle opens, it did have a really aggressive run back up and broke this high. It breaking this high is also something you would not want to see. If you were bearish and this situation happens, you wouldn't want to see it break this high, but it does, and it does it with displacement after closing back below this impulse low. So I saw that, I recognized that, okay, I'm bullish, I'm looking for these highs to get taken out at the open. We're going into the open, at 9.25 that is. And I've just recognized this as the actual manipulation candle, which is really good for me because I don't often see it and act on them. And I actually did this time. I saw it, I acted on it, I got long. And because I was expecting it to be like a fast rejection after having closed back below, I figured that it probably shouldn't come down and take out the same candle's low. So rather than putting my stop loss below the actual swing low, which I'm going to be doing in future, I figured that I'd put my stop loss below that low. And that just happens to be exactly where we wicked down to at 9.27. So once again, that was a opportunity that I could have been a part of. It's 26.5, so that's where my stop loss was, exactly there, and it just works past it. In this area, I was considering getting long right here, but I didn't because I'd just taken, as you saw, multiple losses. I didn't want to jump in and then it dropped down here, and then I'd be pissed off with myself basically. So I left that. But yeah, that was a trade that fit my framework and my playbook. What fit my the framework I had for trailed stops, but also there's another framework that I use, or bias / narrative, regular trading hour, trailed stop. So when we have a gap down like this, we're also below midnight and below 8:30 open. Means we're at a super deep discount. What I like to see is for us to engineer a obvious high for stops to be trailed to, and then entice shorts, and then target that high. But as you can see, it didn't really form straight away. During regular trading hours, we just traded straight up, and I'm waiting for an obvious high to form and for us to entice shorts, which hasn't happened yet. Hasn't happened right there. So at this point, I've now got that scenario that could potentially be there. I don't like it as much because it did take out this buy side already. But essentially, anyone who's been shorting and looking at the regular trading hour charts, or whoever was tripped in short, if they want a regular trading hour swing high to trail their stop to, that's it. And then you can see us dropping below these lows, taking them out nicely, consolidating a bunch, and then eventually running into that high. This long here would have been that trade, the regular trading hour trailed stop framework. I wasn't watching it then. I was away from the charts and locked out, obviously, so didn't have as much motivation to watch the charts there. Then for gold, I'll go over what I was looking at on gold as well. Isn't it a bit crap sometimes? So on gold, all I wanted to see is for us to drop down to this bullish order block and take out the previous with the low of week. And then if we head down to the lower time frames, you can see this is the midpoint of the range, almost old relative equal highs. So we've engineered the low of week on these old relative equal highs. You can see that's where we're hitting right now as well. And that was also just short of this daily bullish order block, which is from this close to that open. So I'll just do that. And all that is, that's the new day opening gap from that level. I think this is the correct one. Don't know why there's a high one, but yeah, this is the correct one. So the daily open of this candle, draw that out. We formed the low of week just short of that. So very high chance we want to drop down into it. If we look at this range as well, that's the midpoint of this range from the high down to the low. Previous day, so consolidating at a deep discount, we then rally up on the previous day. 10 a.m. hits EQ, engineers a buy side pull there, and then trades low into the close. I really liked that because it was showing that we were enticing shorts into the close, and then right away at 1800, right there, 1800, we open up and aggressively run out that buy side, rejects low, and show bearishness. We then put in a intermediate term high as we run above. So we run above this short term high, sell off. So that's first stage of the market maker model. We sold off and we took out a decent amount of sell side below these lows, but we still haven't hit my drawn liquidity. So I expected we're likely to have a bounce back up, but overall my bias is bearish. This is where it starts getting interesting. So it goes to the 5 minute on the right. So on the 5 minutes, as we can see, we pulled up from the lows. And what stood out to me was the fact that 4 a.m. and 5 a.m., the hourly opens were at the same price. This becomes the original consolidation. I'm looking for price to reach back down there. But I got a bit tripped up in this area, and the reason why is because this is the 5 a.m. high. So that's 5 a.m. and then this is the 6 a.m. high. As you can see, it came right up to it. It didn't take it out. So I figured it could be a good place to be like you might be good to target that. Also, if we look at the range, because we broke this low, I wouldn't just look at this range here. I'd actually look at the overall range from the low up to the actual high. And I noticed how we hadn't actually closed, or we kind of did, but I figured that we could make one more run up and take out this premium buy side before selling off. So I was bearish, but then I wanted to potentially target this high. This trade did work out. It just didn't hit my ultimate draw liquidity, but I still traded it pretty well. And 5 a.m. big rally, pulls back, engineers a liquidity pull, and then after engineering that pull of sell side, we then rally higher and then have 6 a.m. open up. 6 a.m. consolidates at a premium above the opening price, at a premium of this range, and above this low. So sell side is now building up below the swing low. We'll then drop down into that, take it all out, and then start climbing, engineer these smooth lows, and then entice longs going into 7 a.m. 7 a.m. essentially does the exact same thing as we see at 6 a.m. We have this sell side pull engineered ahead of the 7 a.m. open, which I'll do that as well. Internal range, we then drop into that at a discount below 7 a.m., accumulate it, and move our way up into the range quite nicely. And then if you look at the 5 minute at this point, I noticed that there was a very clean looking 5 minute order block. So this bullish order block right there on the 5 minutes, that really stood out to me as being very clean. It took out the sell side prior to this enticement, and then we got this nice reaction out of it. So I wanted to buy this order block. So I bought half my position as we dropped into it, and then I dropped down to the 15 second and waited for the turn, and I'll show you what that looks like. So on the 15 seconds, this is our selling off into the order block. Put on the initial position just here. It drops fairly deep into it, takes out the swing low. Then after we get that happening, we identify that there's a swing high just here. So low time frame. And then we retrace back into this fair value gap and then get back above it. So as soon as I saw this, I added to the position with a nice tight stop. So I was able to put on quite a bit of size and was targeting these highs up here, but taking partials as we went. Took partials at these highs there in the range, and then as we hit this premium 1 minute wick, and then each time we made a new high, I took something off. I was watching this, however at this point I only had 2 of my 20 micros left on, and I figured I'm just going to trail the stop loss and see if we can get these highs. But that would have been a really good place to take a partial at this premium impulse short-term high. It then sells off. I thought maybe it's just coming for this low. I added on another 2 and then was stopped on the remainder of the position just for a small negative, but I tried adding on to it just there. And then you have 8:30 news coming out, and which is what melted us right down to our original consolidation. So after we hit that original consolidation, I really liked the shorts because as you see, that's the 8:30 PPI candle. First of all, we're clearly bearish. We're in this bearish structure. This dropping down here like that, there was no need to come down here unless it was these lows. So I was trusting that the bearish structure should remain intact, and so we probably will support this bearish order block at the moment from this range, or the midpoint of this range. Then looking at the 1 minute, also on the 15, very long wick that's enticing people to buy. From relatively lows, long wick, they want everyone to get long. So because I didn't know if we were going to go above these highs or not, I didn't get in just up here, but I made the game plan of if we break down, I want to see us reject from this low. Reason why is because it's a very obvious low that made this high. And if you were bullish, you'd want to see a nice clean rejection out of this low, and also this one down here as well. So once we did drop down into this area, we started consolidating. That's why I was so keen on a short. Also lined up with a 930 open right there. And so I got shorts right here. Initially had to stop sitting up here in case it wanted this high, but I didn't really want to do that. Like if we had worked our way up into here, I would have wanted to get in there. So it's quite a wide stop to have my stop up there. So I was really focused on trying to find a way to get my stop further down. And that's probably partly where I got messed up. And something I figured is that because I had such high confidence in this trade, because like this is stuff I look for all the time, where we've clearly got the narrative that we're enticing people to buy. I know that we're going lower, and that gives me very high confidence in this being a short. Because I had such high confidence in it being a short, I didn't want to miss it. So that's why you see me, first of all, getting in right here, using a wider stop, and then wanting to find another entry as soon as possible so I can tighten my stop and add more size. And that's what ends up shaking me out of the trade, because I didn't want to miss the trade, and so I didn't want to wait for this to happen to get the perfect entry on the 5-minute chart, which is exactly what I should have been looking for, because I was worried that I might go without me. And also the other thing that threw me off, as I mentioned, was this swing high. A lot of the time, if there is a high like this and price reaches up to it, that could be a really good entry point. And if we were bullish right here, that'd be a great target. It's similar to over here. Maybe I'd been primed by the market makers. But you can see a similar situation, that impulse short-term high, run up to it, and then sell off. So I was probably just subconsciously remembering that situation back there and thinking, okay, well, if my average is down here, like if I have my average sitting here somewhere, I'll just do that. If that's my average short price, then I don't really want to have my stop loss all the way up here if it's going to come up into this area. I'd rather get out and then get back in. So as we were sitting in this area, I was aware of the 5-minute, and we were doing this. I wanted to see a closure back below this low, and I was thinking, okay, cool, we've closed above it. The next candle, okay, the next candle took the buy side right there. It's showing bearishness with this big rejection. I really like that. And then it wicks back up, and then it closes up there like that. And as soon as that candle closed, on the very next candle, so right there at 9:45, I jump out of the trade, thinking that, okay, it's probably going to push up to here and then roll over. So I jumped out right there, sells off without me, and then now I have FOMO once again, thinking, oh, I knew it. We've got all these long wicks now. So now the midpoint of this wick should hold price down, and it did perfectly. But the midpoint of that wick should hold price down. So I'm going to get short in this area using this fair value gap and also using the 15-second chart. Where are we? And that is where we are. So that's this area right here. So this is where I was getting short, and then that's where I got out right there at 9:45. Sells off. I get short right up here. I start feeling uncomfortable at this point because I'm looking at this short-term high, and once again you can see that we actually did hit this one. So the exact same type of situation where we've got a displacement leg with a really obvious premium short-term high in it, and this one did get tapped perfectly. It would have been a beautiful entry, but I was watching that and I had a short on, and so I had my stop sitting just above it. Also at the premium end of this wick, the long wick, I just use the extremes of the wick if I'm using a wick entry. So my stop would have been there. But because I was already in drawdown on the day, I wanted more size on, I wanted to get in really big. And so when we dropped back below this low, I thought, okay, if I'm short from here with a stop sitting there, I want to add into the trade and get a tighter stop. So we trade below that low, trade back above it, and then we get a closure back below. I'm like, cool, I'm going to add to the position. I then tighten the stop to essentially break even. So it's like that. And now I have this position on as well. I had, I think, 25 contracts on. So it would have, completely wiped out any losses for the day had it played out. It had risked about 250, I think. And it starts moving in my favor. And then it runs up and takes me out. So, yeah. As you can see, perfectly good ideas. But it is the FOMO that's getting me. Fear of missing out on a move that I have high conviction in. Like, this is a setup that, like, I would, if I just had to bet, okay, if I was to enter here, is it more likely to go to there or go to there? Like, I'd, choose the downside every single time. Like, it's a very, very high confidence trade. 9 out of 10 times this will go to that low. But because I'm then have this high confident trade, and I don't want to miss it, I don't want to wait for the 5-minute entry, and then if the 5-minute just has a big red down closing candle that just rips downwards without me, that would suck. And so I start trying to find a trade a bit earlier on, and then I made the mistake of getting out, not because the trade was invalidated, but because I didn't like how I didn't get this entry signal that I should have been waiting for on this candle, and so I thought that it might come up to here. So I was simply in too early. But then when it does give me that entry signal, I'm out of the trade, and so by the time it actually gives me that entry signal, I've already got back in, and now I'm not even aware of what's happening on the 5-minute chart until I hit max daily loss, and then I look at the 5-minute, like, oh cool, that's right, it's that trade. We're still logged in, yeah, and there you go. And then I jump in. This is the trade that I should have been in. Like, would have easily, as you can see, it almost hit ERL just then. But currently it's up, how many R? 4.4 R currently. Target is down at almost 10 R. So if we can hit the full target to the beat, just about 10 R. And I didn't take any entries because I was too anxious about missing the trade. And I've seen that happen a few times, and you could say the same thing about Nasdaq today as well. If I had simply gone onto the hourly chart, like I did here, and put the entry at the fair value gap low and the stop loss at the high, because it's a signature of heaviness, and so if we fill this gap it's no longer heavy, and just targeted the 800s, that's a good 3.7 hour trade. But rather than doing that, I was like, cool, actually I'm going to go into the lower time frame, and I figured that this looks like a bearish order block because it took out the previous high, this buy side pull. And I thought, okay, that'll be a great place to go short. Get short, get stopped out, try again, get stopped out, give up, and then PPI absolutely obliterates lower. If I'd just been a little bit more, I just needed a wider stop. Maybe if I'd even just checked the news and seen, oh, okay, there's a red folder there, so maybe it would make sense to use the high time frame for my entry, not trying to find a 1-minute entry right before PPI, because it didn't really offer a 1-minute entry simply because PPI made the high, unless you're risking just an arbitrary distance away, like using a ATR or something on the 1 minute chart. There is no structure to put your stop loss at on the 1 minute. And obviously the Asia high is about here and got just ticked above on this candle, and then PPI as well. So yeah, really should have just been using the time frame that this signature appeared on. The long wick plus displacement. Beautiful signature. A really beautiful trade, and I'm happy I at least got the experience to execute it. And I need to just bring that kind of patience and not worrying about missing it to my actual combine and live accounts, because that's the difference between this paper trading account and my combine. Is that in the paper trading, like if this didn't fill me, I'd be like, whatever, don't really care, it's all good. I don't want to trade this anyway. But in my combine, if it doesn't fill me, it's all of a sudden like I don't want to miss this move. Like this is my model, this is my setup. And so I was looking for, okay, well, I'm going to use this hourly order block, and then trying once again here and quickly getting stopped out on this candle, and that was because, yeah, just there. So I had a really tight stop because I recognized that, yeah, I got out because it looked like it wanted this high. Stats. Yeah, too many trades. I mean, 10 trades today. Like I counted it before, so 10 trades overall. It's hard to get the stats when it counts every single partial as a trade. But profit factor, like that's a pretty insane profit factor. It's even bigger than yesterday's one. 4,500 gain, 5,100 loss. My profit factor used to always be, like below 1,000 for each number, but recently it's been a lot higher. It's just been because I've been putting on more larger lot sizes and using a tighter stop, which is actually a good thing. Theoretically, that's what I've been doing, but yeah. And then if we look over here for yesterday, it went perfectly fine as well. Yesterday, on my combine, I took 2 trades thinking I was on a practice account. They were C grade trades, and it turned out I was on my combine and hit max daily loss straight away. And so I was forced to be on the practice account all day, which was, it was good, but still kind of sucks. And then that's the 2 trades I took yesterday. Both of them were really low quality. Both of them I thought I was on a practice account, just messing around, although there's no point doing that on a practice account. Like if I'm going to practice trading, practice taking good trades, don't practice taking shitty trades. So that's the lesson there. So, yeah, I could definitely improve on a few things. I mean, today, as you saw, like it felt like I took a lot of trades. I only really took 10 trades, 5 on NASDAQ, 5 on 3 to 5 on gold, 3 trade ideas, 5 executions. Still a little bit too many trades, more than I'd want. But yeah, might as well take a partial, I suppose. How to do that? Buy, sell. Most of the way there, take half off. There we go. See if we can just leave it and let it hit. Yeah, but that will do for this review. At least I've got some nice trades to add to my collection of trades examples. And I think I figured out a bit more about what I'm doing wrong, which is FOMOing into really, really good trade ideas. Like I have a really, really quality idea, and I don't want to miss it, and so I take a low quality entry. So I need to try and figure out a way to make sure that I'm only taking the high quality entries, or maybe not worry about catching every perfect trade idea, but just worry about if I have a perfect trade idea, that's great. And now if I get an entry offered that aligns with that trade idea, then I'm going to make a shit ton of money. If not, then yeah, whatever, that's all good. I'll find the next trade. Because if I have a really clean idea and it offers me a really clean entry, then that's how I'm going to make these 10R trades. If I have a really good idea but a shitty entry, then it's I'll be lucky if I get just a few R out of it. Like at that point, you might as well just leave it. So yeah, got a few things to work on for sure, but super confident in this trading thing and that I can do it, because like I know where the price is going for the most part a lot of the time, and I'm able to find good entries a lot of the time, but then I do silly stuff like I mentioned today, or I don't let the trades run properly, or just over trading in general. So I've got a few things to iron out of my trading and get better at. But I know that when I fix just a few of these small things, like I will be unstoppable. Just have to get there first. That'll do for this review, and I'll mark up some charts.